What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It's August 3rd of 2022. We had a pretty epic rally today, so we're going to dive fully into it. S&P 500 finished the day at 1.57%. The Perma Bears were Perma barbecued today. Nasdaq was up 2.72%. Small caps were up just about 1.5%. And you can see the Dow Jones is our big laggard, only up 1.27%. Our ARK Innovation ETF was up 6.08%. I actually closed out the final piece of my ARK Innovation ETF January 20th of 2023, 40 strike calls. Took those off for a nice winner. Volatility got crushed across the board. It definitely seems as though a lot of the players that have been stubbornly short for the past couple months, all the perma bears, all the big galaxy brain macroeconomists, it kind of seems like they're throwing in the towel. And that is evidenced by this just, wicked vol crush. Breadth finished out positive, and you can see the up volume finished out at 66.4%. The trend model flipped back from a +1 to a +3 pretty early on during today's session. Now, I must say, I have never experienced a rally before where everyone is super anxious. Everyone is like upset that the market's rallying, and everyone's like, just worried out of their mind and super emotional. Honestly, like, the market rallying is a good thing, assuming you're not like fully short or anything like that. I posted something on Twitter earlier today. It's one of those days where no matter how much money you made, you can always look to some other stock. Oh man, I wish I was an HKD. That one went up 5,000% or whatever it did. Like, if you're a trader and you're really in this for the long haul, like, days like this, they're so common. They happen all the time. Like, almost like once a month you get a day like this where everything just flies off to the upside. Same thing on the downside. There's some really big down days. Like, in the market, especially if you're a price action trader, just think, like, how long do I want to be doing this? If you're going to be doing this for another couple of years, 5 years, 10 years, 20 years, I plan on doing this for decades, like, you're going to experience everything. And the market's really just an uptrend, pullbacks, then an uptrend. Eventually that transitions into a downtrend. You got bounces within the downtrend. There's nothing new that is happening. So take a look here. Finviz heat map. We had a very nice rally in all these FANG stocks. You can see Amazon was up 4%. Meta also had a pretty nice performance. Crude oil pulled back again. Crude oil is trading at about $90 a barrel, which is fantastic. A couple of months ago, crude was at like $120 a barrel. So really good stuff. And that definitely helps the inflation outlook. And those energy stocks did come down. A lot of them are still holding their key moving averages though. So I don't think these energy stocks are like, oh my gosh, they're just toast. But yeah, when they were pricing in $120 per barrel oil, it definitely was a little much. Sectors. The ARK FinTech Fund finished out the day up almost 8%. This was led by PayPal, of course, which reported earnings last night. They announced a $15 billion buyback. At the time, their market cap was only about $103 billion, so that's almost 15% of the entire float. Now, noteworthy, the solar stocks actually sold off today, and I believe this was catalyzed by Sedge, a company called SolarEdge. They are within the top 2 slots within the solar ETF in terms of weightage. And they basically whiffed on their earnings report. The stock was down almost 20%, and I think that catalyzed really just a sell-off in the whole group. I'm actually currently long DQ, which is a Chinese solar stock. That one reported pretty solid earnings. We'll take a look at that in a moment, but I think it was dragged down in part by these Sedge earnings. And it really just goes to show these solar stocks, they are not all built the same. They can be very different businesses. Now let's take a look at our style factors. Most noteworthy here is the growth style factor was up 2.15%. That was a big time leader. And a lot of the stocks that have sold off the most year to date, they were the stocks that were leading the rally today. So I definitely think, a lot of shorts got absolutely cooked. And I think there was just a lot of panic out there. Honestly, as a trader, this is super cliche to say, but your goal should really just be, what's the size of my average winning trade? And what's the size of my average losing trade? And if you're taking some winners off and the winners are bigger than your average loser, That's a really good win. Like that, you should definitely be giving yourself like a pat on the back. You should never think like, well, what happens if I sell it and then the market keeps going up? Like, that's going to happen all the time. Like, you never want to optimize for selling the top. That's like a sure way of achieving failure. Because most likely, if you're always worried about like, oh, I'm going to sell this, then it's going to keep going up, eventually you're just going to end up holding things through downtrends and all that kind of stuff. It's never a good look. So, yeah, if you made a couple bucks today, that's fantastic. Of course, we all could have made more. It's definitely possible. If you were to take all the top moving stocks today and assume, man, I should have been in all those, like, you're kind of just setting yourself up for failure. It's all about just, making your decisions. Once you make a decision, then really just look forward to the next decision unless you're doing a post-analysis. That's really just a PSA to all my traders out there that are getting a little bit anxious or a little bit nervous. Like, if your system works, you're going to be fine over the long term. Don't sweat the small stuff. All right, let's take a look, and we'll go over to the indices, and then we'll take a look at some of my trades for today. Oh, speaking of Sedge, take a look at this one. This one just fell like an absolute brick. And let's actually talk about my DQ trade. So DQ is in this same exact group. And DQ, I gotta say, I might end up having to stop out of this trade. Not too sure. This one's definitely on the cusp. DQ reported what I thought was a pretty fantastic quarter. And we can take a look at those numbers in a moment. But DQ pretty much got taken down with the entire solar sector. So you can see a pretty big red candle here. We did end up finishing up 1.38%, so I held on to my shares. But we'll have to see how this one plays out, how it marinates, etc. But look at this. DQ for the quarter ending June of 2022 put up $8.18 in EPS, and the stock trades for $62.04. So let's make the rough assumption. Let's just assume that DQ stops growing and it just earns $8 and change every quarter from here on out. That's a very rough assumption, but that's about 32 bucks in earnings, and the stock trades for 62. If you hold this stock for 2 years, you buy it for 62, the stock earns 32 bucks the first year and 32 bucks the second year. You've already paid for your purchase of this business in just 2 years. But granted, it is a Chinese stock, and we all know the risks associated with these ADRs and the US and China tensions. So that's really why this stock is so discounted. But the reason why I like it is because the chart pattern is actually very good. It's not like, oh man, this stock is trading at 52-week lows and like it's getting demolished. Like, it's actually working its way up towards the highs. So yeah, added to that position today, but we'll have to see. Again, it did sort of get taken down with some of these other solar stocks. S&P 500, look at this. This is so funny. So last day of July, remember we had that really nice rally. Now look at what we've done so far for August. Again, we're only 3 days in. Still got plenty of time on the clock in August. But overall, we kind of chopped around for a few days. Today, I guess we did make a new month-to-date high, which is pretty good. But in the grand scheme, like, all it would take is one little, like, mini pullback, and we're just back in the range that we were in. So when the market's moving to the upside, you got a lot of beaten down stocks that are rallying. Things are moving up 10%, 15%. It can produce that anxious feeling, but it's okay. You really just have to think about, like, what am I doing? Am I seeing the setups that I'm looking for? If you see a bunch of setups, then place a bunch of trades. But like for me, a lot of the stocks are getting a little bit extended. So I've really just been in the mode of, hey, let me book some targets and take some chips off the table. So yeah, this is our hourly chart. And you can see that dynamic. Like, all it would take is like a little dippity doodah, and we're just back right in that range. So then you have to ask yourself, oh, am I going to be anxious now that we're back in the range? Am I going to think that we're going to crash there? If we move up 20 basis points, I'm afraid that the market's going to rip without me. If it moves down 20 bips, I'm going to be worried that the market's selling off and stopping out of everything. You want your process to be aligned in such a way where if your time frame is, I'm a multi-week, multi-month position trader, the market looks pretty good. And even if the market does pull back to the 5-day EMA, God forbid, it should still look pretty good to you. If you're a day trader though, and you're operating on like the 5-minute chart or the hourly chart, then that really does make sense, where like for every little movement in the market, maybe you are changing your bias. So it's definitely just important to nail down your time frame. Nasdaq, very similar chart, and this one actually, did even better today. It was up almost 3%. We're getting pretty close to that Venom R1 pivot. Let's take a look at the small caps. Small caps were also trading higher, getting a little bit extended from that 5-day EMA. And then, of course, we had our dogs of the Dow. These dogs of the Dow were the underperformer, but nonetheless, they still had a rally as well. All right, let's jump into my trades for today. So yeah, today primarily, I was just booking stuff. So DQ, again, that was the one trade that I added to. I added to that position in pre-market. And it did sell off from where I added to the position. So definitely want to keep this one on a tight leash. And then what else did we do? We sold the 15 strike August 19th calls against the remaining 50% of our AHR common shares. I was able to sell that for 70 cents, which in my opinion is pretty good. Reduced our cost basis to $11.79. Now for me, the way that I see this is, hey, I just bought AHR yesterday. I took a target in it for maybe like a 7% gain, something like that. But let's say it does rally up to 15. My cost base is $11.79. That's about like almost a 30% return in just a few weeks of holding it. I'm pretty comfortable with that, and really just, taking that gain and potentially flipping over that edge. In terms of options, I did close out the final third of my ARK Innovation ETF January of 2023 40 strike calls for $12.50. I had paid $6.85. This one I was very fortunate. I essentially bottom ticked this ETF literally to the day. It's very rare that happens. And I remember when we bought this, everyone thought we were crazy. I remember going on Twitter Spaces and saying these growth stocks, there's a lot of upside. These are all down 70, 80% on these videos as well. And people looked at me like I had 5 heads. And it was like, how can you be long this market? And now, honestly, like everyone's becoming a believer now that the market's pretty extended. So for me, again, like the next question is, but what happens if ARK continues to go higher and you sold it? And honestly, you just can't think that way. If you're thinking that way, like you can take, like for me, I almost doubled my money on this piece of my ARK trade. You can either choose to be happy with the money that you made, or you could just, for every trade, there's always a way to see it as a glass half empty. Like let's say if it goes up more, oh man, I should have held on to it. Or let's say then you hold on to it and then it goes down, oh man, I should have sold it. And there's just always a way to beat yourself up. So it's really just like you have to take the high road and just decide, like, I'm not going to be like a complete, loser to myself and just like, beat myself up over everything. If there's stops that you're not taking and like you're letting your losers run, like that's something to beat yourself up for, or, whatever. But you can't just be like, oh man, I sold that and blah, 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 and like judging yourself on what happens after. Like that's the quickest way to really just burn out of trading. And honestly, it just takes the fun out of trading. Like trading, I think it's a lot of fun. Like I truly like really enjoy this. It's my passion. I want to keep doing it. I want to keep getting better at it and just keep honing the skill. And like my goal is like, I want to be a fantastic trader. I want to be one of the best traders that's ever done this. And I just know from all the greats that I look up to, like you don't take that path. You don't get there by like, just Monday morning quarterbacking everything. You got to just make your decisions and then be comfortable with the decisions that you make. And also, what do? We close out the remaining 90% of our BITO. This is the Bitcoin Futures ETF. September 16th, 15 strike calls. I closed these out for $1.25. I'd paid $1.33. The first 10% we took off for about $1.77. So overall, this trade was a scratch. And I just wrote here, considering rolling this out in time to avoid the theta decay. I'm actually pretty pumped about this one because I was in the trade for about a month and it really did nothing for me. And, in options, the trade has to work for you or else you're going to start to pick up theta decay. So I just wanted to get out in front of that. And perhaps I re-enter BITO. Maybe I get into some December calls, or maybe I just buy the common shares. But I feel pretty comfortable just, into this really nice market strength, just taking that trade off. So yeah, with that said, just make sure you're being kind to yourself out there. today was like pretty crazy just in terms of like talking to people and like all like the negativity around this rally. Like honestly, if you made some money, you did a fantastic job. With that being said, that about does it for this market recap video. Everyone enjoy your evening. As always, I'll see you all tomorrow.